Sure. Well, a lot of it depends on our trading situation, and I think what we have to say is a major trading partners, China, if their stock exchange is reflecting the state of their economy, and they actually had to close it when the market had dropped by 7%, that means in reality it probably should be quite a lot lower. What's the outlook for trade with China? Not as positive as it was there. And then we look at Germany, down by 2.5% to 3%, the industrial engine of the whole of the European community. We see their market taking a knock. What are our export prospects there? Not so good. So if I add all this up together, I say really, South Africa, trading outlook, not that good. Yes, we may have a weaker rand, which will stimulate the rand receipts for our exports, but I think it's going to be taken away by the higher input prices, and I think that really we have to realize that with very low consumer confidence, very low business confidence, we're not going to get any new investment. We're finding that foreigners are more inclined to take their capital out, this desperately needed capital, than to bring new capital in. All of this says hard times ahead for the rand. I don't think we've seen the worst in that case, and I would say be very careful about the rand exposure.
Is the oil price at least going to give us some relief?
Well, yes, it has come after all from over $100 down to $35, and now it's $38. But you know, it's dropped so far, and now it's got a small bounce. Is this just that what we normally call in markets that dead cat bounce, a minute bounce after a very sharp, long extent of coming down? I would say I don't think we're necessarily going to see it lower for an indefinite period. I think what the Americans are saying, they're making it quite clear that they are now in control of the supply side of the supply-demand equation there, and they may be the biggest user. Now they're the biggest supplier. Well, I think that they're holding all the cards in their hands, and they will determine where they want to see that oil price.
How significant was it that on New Year's Eve they sent off their first shipment of crude exports since the 72,
yes.
If I'm not correct?
That must surely be a warning to the OPEC members to say, look, we've got excess capacity. For the first time in 40 years, we're actually going to export. We've been able to export, but we haven't. We've held back. Now it looks like there must have been built up a surplus that they want to move. Two reasons. Maybe they want to move it to establish their dominance as the commercial center of the world, or perhaps it's just to say that they've got to move it to make space for the new production which keeps coming along. So I think if inventories are likely to build, and that's likely to keep the price relatively low, that $35 to $45 range for quite a while. You'll say, yes, but it's been to 35. Yes, but it's been to $120, $130 a couple of years ago. So let's look at that in the long term. It's very low and likely to stay there, I think.
What about equities here in South Africa? I mean, we haven't had a great start, have we?
No, we haven't. And I think that is reflecting the outlook for the economy. You know, there are lots of questions. So what sort of growth are we looking at for this year? Hey, are we going to have a positive growth level? Will we just be fortunate that we get a zero, no change? I think that's what we have to look at. Remember, in those 10 years running up to 1994, a period of massive change, the Aussie shifted by 1% up or 1% down over a period of that decade. I wonder if it's not possible that we could be forced into that sort of situation again. We would then call it, I suppose, stagflation, a stagnant economy with relatively high inflation, not great for either consumers or business on the outlook.
Then, I suppose your reading on GDP isn't going to be more cheerful, is it?
Regrettably not. As I said, I think we're going back to that previous sort of little change, and I don't see that little change on the positive side. World stimulation isn't there to take what we can produce, and that's a big problem. And our economy, you know, if we've got officially 35% unemployment, around 60% for the youth, really, where's the demand for our production going to come from? It's just not there. So I fear we may just have a rather stagnant economy for the medium term.
Ian, inflation is obviously going to be a problem with the rand remaining weak, there not being any growth. But is it all externally driven?
Not entirely. Look, it also reflects the state of the economy, so that means keeps the rand weaker for longer, and I think that, the Governor of the Reserve Bank at a presentation late last year, said just watch the rand, then look at what that's likely to do to inflation. Weak currency certainly means that the cost of so much of what we buy here is going to be that much higher that we're going to see inflation above the 3 to 6% range. They're forecasting a 6.4% average next year. Well, perhaps we could say expect them to be conservative. It could well be higher. That in itself, once again, is not a positive economic factor.
We would usually buy gold to protect us against inflation.
Yes.
But I suppose in this kind of scenario, it's not a very wise idea.
Well, it doesn't look like it, does it? It just looks like the only winner regarding looking for a hedge against inflation on a global basis is the dollar. You buy gold normally as a hedge against inflation or currency volatility. Well, the dollar seems to be almightily strong at the moment, and I see no reason why it shouldn't remain in that sort of a classification for the foreseeable future or for the medium term, the next year to 2 years. And if that is so, that once again adds to the pressure on the rand. The dollar-rand exchange rate is under pressure for that period too. So I think our view on inflation is that it's likely to be higher for longer than has been anticipated recently.
Last thing I want to ask you about is, what's your view on this Chinese method of stopping trading?
Wow. Well, there's certainly no, what can I say, as an observation to the sanctity of free markets. No. Clearly, they don't believe in it. Free markets are allowed to find their level, where buyers and sellers establish that this is the level at which trade will take place. This is not happening. So I think that the Chinese are not yet convinced that they're going the free market route to markets and commodity prices and their place in the world economy. So yes, a little bit worrying. They may feel the need to do some currency adjustments themselves, which of course they can afford to do because of the massive amount of reserves which they actually hold.
Thanks for your time, Ian.
Thank you.
That's Ian Cruikshanks, Chief Economist at the SABC Institute of Race Relations. I listened to what he said and I look back at history. I can't help but think that the more things change, the more they stay the same. Let's take a break.